Good morning, good afternoon, and good evening, everyone, and welcome to Scaling to Exit. My name is Allison Berardi, and I'm with the Nasdaq Entrepreneurial Center. For those who may be new to us, the Nasdaq Center is a nonprofit dedicated to helping entrepreneurs access the knowledge, mentorship, and resources they need to start and grow successful businesses. Today's session is designed specifically for founders building companies with significant growth ambitions. Whether you're raising capital, managing venture investors, scaling go-to-market, entering new markets, or preparing your company for long-term scale and exit opportunities. Many of you are operating in environments where speed, scale, and capital efficiency matter, and where decisions are shaped by investor expectations and rapid growth. This programming is intentionally built for founders navigating that kind of trajectory. Before we dive in, I'm going to launch a few quick polls so we can get a sense of where everyone is in their journey. We use this feedback to help shape the programs and resources we provide for this global community of entrepreneurs. While you're answering, feel free to drop in the chat where you're joining from today. We always love seeing the range of places founders are dialing in from. We'll also have a live Q&A at the end of the session, so please feel free to submit questions anytime using the Q&A feature. And while the poll is running and we're taking the temperature in the room, I'd like to briefly recognize the partners who make these programs possible. The work we do at the Nasdaq Center is supported by organizations including Nasdaq, Wells Fargo, JP Morgan Chase, KPMG, Walmart, the Asia Innovation Hub, Wilson Sonsini, the Narrate Foundation, KKR, BPM, and Blend 360. Their support helps us expand across access to resources and knowledge for entrepreneurs everywhere, and we're so grateful for their partnership. So now let's get started. I can see DC, Cameroon, Atlanta, Hawaii. Mm. And without any further delay, please join me in giving a warm welcome to our special guest, Fleur Madden, a three-time exited founder, investor, and board chair. Welcome, Fleur.
Hi, thank you so much for having me today.
We're so happy to have you. So we'll get started with our fireside chat. And
Mhm.
we'd love to hear any background you want to give our audience about your background.
Absolutely. So my name is Fleur Madden and I'm the CEO of the Ginsberg firm. The Ginsberg firm is actually my fourth business. So I've founded four businesses and I've exited three. And I'm also a board chair for a not-for-profit that supports vulnerable women who are experiencing domestic violence and homelessness. It's called Four Voices. And I'm also fourth generation Australian business owner. So, right, this is in my blood, guys. Founding businesses, scaling businesses, and selling businesses is what the Maddens do.
Fantastic. Okay, so let's get started. So, Fleur, why should entrepreneurs begin thinking about exit strategy early on? And how does that mindset influence the decisions they make as they grow?
Absolutely. So, what I want to say to you guys straight up is that the end matters just as much as the beginning. Okay. And so often we invest in the foundations and the time that we put into that. But we think about an exit when we're like a marathon runner with two broken legs. We can't go on one more day and we go, finally, I'm going to exit. Like that is not the time, guys. Okay. So the best time to be planning for an exit could be years out. It could be from the beginning. But what I want you to be really clear on is that successful exits take strategy, they take time, they take money, and it's about how do we take the most amount of money off the table for you at the end, okay? And so if mindset wise, we stop thinking about, for instance, how do I make money this year and start thinking about how do I add value to my business where one day I'll be able to exit successfully, you make different decisions. So if we start making decisions through our business with an exit lens, then you're making better decisions for the business in its growth, in scaling, but also then for a potential exit one day.
Thank you so much. So, our second question, when you evaluate a company's long-term potential, what characteristics distinguish a business that is simply growing from one that is building real enterprise value?
So, revenue growth as business owners is something we talk about all the time, right? What are we turning over? What are we doing this year? But when you're in an exit mode as well, we're not just focused on our revenue, we're focused on our assets. So businesses that exit well are really focused on what are the assets in their business that a buyer would potentially be attracted to. Now, it totally depends what industry you are in on what those assets might be. Brand is always an important asset in a business sale. Now, the three businesses I have sold, each of the new owners have said they were attracted to my business because of the strong brand we had created around that business. Okay. So a lot of people don't see brand as an asset. I'm here to tell you it absolutely is. So brand is really important. Your intellectual property is really important. Like, what's your secret sauce in your business, right? What makes you uniquely you that a potential buyer is going to be attracted to you? Obviously, growth opportunities is really important. It could be, do you actually own your products? Now, this is something that when I'm working with business owners and looking at an exit one day, I remember I was working with a sunscreen brand, sun lotion. Would you call it sun lotion or sunscreen? Yeah, sun lotion. Sorry, Australian. And that I said to them, like, do we have contracts in place with the manufacturers and do we own the formulation? They didn't own the formulation and they didn't have a contract in place with the manufacturer. So guess who owns that? Really? The manufacturer owns it. Now, how do we sell a business if you don't own your product? So making sure we have as much ownership around our business is really critically important. Now, if you're on this call and you have a product-based business, I get it. Sometimes to get into market, we come up with a minimum viable product to test it. We all do the same thing. Years pass down the track and we're still using that product because it's been selling really well. But you can't sell that product unless you own every element of that product. So I think if we really focus on ownership when we're building enterprise value, it might be your systems and processes that we own around the business as well. So ownership is really critical to building value.
Yes. So number three, founders are often the center or at the center of every major decision, relationship, and process. What are some of the
Mhm.
first steps entrepreneurs can take to build a business that becomes less dependent on them over time?
Okay, here's a big one, guys. Founder dependency kills deals. Now, if every customer wants you, if every client problem comes to you, if every staffing problem comes to you and it lands on your desk, then you've built yourself a little bit of an average job, not a company. Okay. And the thing to remember is that potential buyers don't want to buy an average job. They want to buy a thriving business that survives long after the owner has exited. So some of the things that you could be doing to really eliminate that founder dependency. One, biggest one, is building out your management team. Now, when I sold the Red Republic, which was a PR and brand agency and digital, we had offices in Brisbane, Sydney, and Gold Coast in Australia, and we had one office in Los Angeles here in the US. And I fully built out my management team because I knew I wanted to exit. I had a managing director, I had a general manager, I had a creative director, I had a manager in each office in each city, right? So every decision was not coming through me. If I was injured in the business and couldn't work for the next 6 months, the business would continue. So a question for you guys is, if you took yourself out of your business at this point in time, would the business continue? Now, building out that management team is really key. Also, empowering your team to make decisions without you. Okay, if you're still making every single decision, again, we've got a great job or an average job, but we've got a job, we don't have a thriving business. The other is documenting systems and processes. So if we remove you from the business, does the business still run day to day? Okay, and I think also really stepping into a CEO role, not the founder role, which is very operational, on the tools, in the trenches with the team. But when you become the CEO, you're empowering your team to deliver. Okay, we're looking at big vision as well. So I think there's some of the key things that you could start doing to reduce that founder dependency.
So, Fleur, if we were to provide a roadmap for our founders here on the call, where
Mhm.
would you start and what department would you start? Sort of, you know,
Yeah, absolutely. So, first of all, I'd be really clear on what are the assets that I've currently got in my business and what are the assets that we need to build out in the business. I would also look at who potentially could buy my business. Now, I'm going to be really honest with you. The first time I sold a business, I wasn't thinking big. I was thinking small. I was thinking a local buyer, somebody maybe it could be an industry buyout, maybe a competitor. I definitely was not thinking a multinational listed on the New York Stock Exchange would come and buy my business. Now, that is what happened. So, ever since then, my advice to founders is think bigger about who potentially could buy you. So, even starting a list of like local, domestic, like national, and then international buyers. And how do we get on their radar? Because I can guarantee you that buyers are already they're looking, they're in market. They may have already identified you as well. So there are people watching you that you don't even know. I mean, I acquired a business, gosh, it must be 10 years ago now, to join one of my PR agencies. And I had been watching them for probably 6 to 12 months. And they had absolutely no clue I was watching, right? So I think that that is a really critical step. Looking at how you can build out your team so the business is not so reliant on you is another critical step. Now, if we weren't thinking about exiting one day, you might be happy with the team structure you have right now. But in order to scale, to sell, we need to build out that management structure. And I think when you're looking with the exit lens, then you put on people that, maybe we couldn't afford them right away, right? But if we don't put them on, can we afford not to? Is the question as well, in terms of the growth trajectory that we're on. So I think looking at team is critical, looking at your systems and processes. So documenting everything. Now, guys, we have that much technology these days that this should not be hard to do. Back in the day in my first business, which was 23 years ago, you're documenting everything, you got your pen and paper out, right? Now we can use AI, pop everything into AI and say, need a handbook on this, need a team manual on this, like get everything documented out. When I sold the Red Republic many moons ago, I remember that their HR team actually said to me, Flo, we've never seen HR practices like what you were using in your business. So the other thing I would say to you is that small is a mindset, okay? And just because we're a small business doesn't mean we can't be operating at a level of excellence. Let's impress those buyers when they come in. Let's blow their socks off.
mm, how inspiring. So beyond revenue, what are some of the key drivers that make a business significantly more attractive to investors or potential acquirers?
Mhm. So reducing the risk in the business is really a critical step, okay? No one wants to buy a business that looks risky. So reducing founder dependency is really important. Also, we talk a lot about reoccurring revenue. The reality is not all businesses have reoccurring revenue. I want to talk about predictable revenue, okay? So if we can show over the last few years that we are mostly on and up. Now, the reality is business isn't always on and up, but can we explain the months that we're not? Can we explain what's happened in the business at that point and that we're heading in the right direction? Predictable revenue is really important for a potential buyer. Now, the flip side of that is there are buyers that come in and buy distressed businesses where predictable revenue is not as important. But we're here today to talk about successful exits and ensuring that you take the most amount of money off the table. So if that is the case, then I want to talk to you about predictable revenue. Documented systems and processes as well. Like they don't want to know that they buy the business. What if you decide you're not returning and then there's nothing there to document how we run the business day to day? So those systems and processes, intellectual property as well. Like we spoke before briefly about what's your secret sauce and do you own the elements of those things? Really important. Something else that I think buyers are looking at beyond revenue is also diversification of customers. Now, let me give you this example. I've been around in business for so long. I've, seen many peaks and troughs. And in Australia, maybe 15, 17 years ago, we had a major financial crisis. And I lost a whole, like, 50% of my business in about 24 hours, right? Because we were concentrated on the property industry and the property industry died overnight. I have never made that mistake again. Now, we changed from being a property PR agency to being a consumer PR agency, and we specialised in property, hospitality, travel, fashion, and beauty. I can still rattle it off today. And the reality is that people weren't building new homes, but they might still take a night away at a hotel, okay? They may not be buying designer outfits, but they'd still buy a lipstick. So, we were looking at industries that still did well even in tough times. And at the end of the day, that completely revolutionized my business. It enabled me to sell many years later to a much bigger player who was a consumer advertising agency. So, I think sometimes in the hard times, it really kicks us into gear of what we need to do to make sure that our business stays commercially viable. So that customer diversification is actually something that I think a lot of buyers look at as a positive. Leadership depth, okay? So as we spoke about earlier, everything can't just be centralized with you, that we've got specific leaders in the business that can carry on the business without you. Financial transparency, okay? If you're in due diligence and your books are a red hot mess, that doesn't look great for the business. So, and as small business owners, I mean, we all can have a tendency to, not put on the CFO because we think we can still do the books, or be putting a lot of personal things through the business that look like a business expense. Like none of that works in a sale, right? So if we're looking at a sale, then do we need to get an outsourced CFO in? Do we need to fix up the books a few years out to make sure they truly reflect what it takes to run the business? Not what you've been doing to run the business, but what it takes to run the business. And I also think, as I touched on before, that brand is an enormous asset that gets underestimated often in sales. But I absolutely am a strong supporter of strong brands in business.
Mhm. I love your points about durability and mitigating loss. So sometimes it's difficult for founders to know which growth opportunities will create long-term value, and how can founders determine this as they go along?
Now, look, I love good opportunities that just pop up, okay? And I don't want you to be saying no to things that come, but I think you need to create, I guess, a value system on how you're going to potentially score opportunities against ones that just take your eye off the ball. So, a few things: does it increase profitability if the opportunity or revenue is coming through? Does it make the business more scalable? Okay, if it does, this is something that I'd strongly suggest that you invest in. And would this make my company more attractive to a potential buyer as well? They're three of the things that I'd be asking myself with growth opportunities. Which are the ones I should go with? Well, which ones score as highly against some of those values there? And often, if it's simply just creating more work for the team and you can't see that it is going to, I guess, bring in more business, it's not going to make us more profitable, it's not going to make us more attractive to a potential buyer, well, you know what? Skip on that.
Thank you so much. Which operational systems have the greatest impact on scalability and eventual exit readiness, from your vantage point?
Yeah, look, being really clear on your finances, okay? Now, for the women in business on this call as well, it is an area that often is not our forte unless you come into business because you're an accountant or a financial planner, etc. So really understanding your numbers and doing forecasting so you know what levers to pull in the business, right? Somebody that I am doing coaching for at the moment, I had to say to her a few months ago, I need to see the profit and loss. I need to understand the numbers. And she wasn't watching them. And after we had the meeting, there were a few tears, and we had to make some really tough decisions in the business in order for her to survive, in order for her to move. Okay, so understanding your finances and what do we need to do dollars wise in order to invest in further growth is really critical. I think operating systems as well. Like often we're running off the smell of an oily rag in small business, but there are some years where we do need to invest in those systems that in order to get us to the next level. And I think, for me, whenever I'm thinking about that sort of investment, I'm looking at it from an industry level of excellence. Now, who's ahead of me and what are they doing in that space? And how do I compete with that if I don't have that in place? Okay. And so every year looking at what we need to invest in the business to take us to that level of excellence. I think also HR and recruitment systems. I mean, we're all in the business of people and attracting the best talent. And, talent makes or breaks a business as well. And indeed, the first business I sold, my team was a critical part of that sale. It was a professional services businesses. Without them, I probably couldn't sell the business, right? And so I did incentivize a few of the senior people as well through the process of the sale that they would stay on afterwards, financially incentivize them to do so to make sure that the sale went through and was successful. So I think having those right HR processes and making sure you're attracting the very best talent that you can is also really critical in terms of increasing value.
Thank you so much. Many of our subject matter experts talk about personal branding being so important for building business. And I
Mm-hmm.
know you were talking about the importance oftentimes in sales of de-emphasizing the founder. Where do you also see it important to build the personal brand of the founder?
Look, I think personal brands are critically important in business. I think your business reaches a point, though, where your brand needs to transcend the business brand. So, for instance, I've had 4 businesses. My brand definitely supports and uplifts the businesses that I'm in, but they need to stand on their own 2 feet. Okay. So, really creating the infrastructure of the brand around your business. In year 10 of one of my businesses, I did a complete rebrand because the brand was really focused on me. And the reality was, I had 50 staff. Like, it didn't need to be that focused on me. So we did a whole rebrand of the business. We really owned who we were today and who we wanted to be, in the next 5 years. And business sales went up the next month by 30%. Okay. And so that was really an interesting lesson for me as well, because there was a risk there. I was taking myself out of the spotlight of the business and I was pushing the team forward, pushing the work forward. And the night before, I was thinking, what are you doing? Like, you've changed every element of the brand. We even changed the business name. Okay. And it was one of the best things I ever did and probably enabled me to sell the business as well. So I think there's a point in the business where you don't need to be the front person all the time.
Thank you. Congratulations on that pivot.
Thank you.
Yeah. Customers, revenue streams, and partnerships all contribute differently to enterprise value. How can
Mhm.
founders evaluate whether their business has the right mix to create a resilient, attractive company?
Mhm. I mean, one of the biggest risks I see is customer concentration, and we spoke about that before with diversification. And I've encouraged founders really to think about, how do they have multiple revenue streams? How do they speak to multiple different avatars of clients as well? Now, don't get me wrong, I love a niche in a business. I do. Okay. But a niche doesn't mean that we only have, one customer there as well. And so I think a good question for all of us is, if we lost our biggest customer tomorrow, is it really going to impact the business dramatically? Now, if the answer is yes, then we definitely need to have a strategy there on how we attract more customers in. I had exactly the same thing happen at one point in a business years ago. We had one client that was probably worth about 15% of our business. And we did part ways after a really long time of doing business together. And after that, I was like, I will never have that situation again where we just so heavily concentrated and reliant. And so today, I really encourage founders to diversify customers, industry, and revenue streams as well. And even geography where appropriate. I have expanded businesses domestically and internationally. And it's an exciting time when you get to do that.
This is so inspiring the way that you've thought so big in all of your business endeavors. Will you just speak a little bit to how to solidify contracts prior to a sale? Contracts with customers,
Yeah.
with vendors, because I know that's an important piece.
Alison, it's so important. Whenever I'm working with business owners to prepare for that successful sale one day, I can guarantee you that they don't have all the contracts in place. So whether it's customer contracts, now a big thing I hear from business owners is, look, we have worked with these customers for years. We've never had contracts. It's not a problem. It's a problem for the buyer. Okay. Sorry, my light just went out. That's not very good. There we go. Sorry about that, guys. It's a problem for the buyer. The buyer needs certainty. Okay. Now, if you put on your buyer's hat, would you want to buy a business that didn't have any contracts in place? Okay. There was another business that I was working on their sale a few years ago, and they were in furniture manufacturing. Beautiful business, gorgeous products, but we didn't have a contract with the key manufacturer. And the owner was saying to me, but Fleur, I've done business with them for 10 years. They're amazing. I'm like, the new owner is not going to care about your handshake. Okay. So we need to get those contracts in place. So definitely, if you're taking notes today, please write down what contracts do we not have in place that we would need for a potential sale one day. And also if there are any people in the group who have co-founders as well. I've definitely seen where co-founders have held up a sale because one party wants to sell, the other one doesn't want to sell. Let's get the right contracts in place from the beginning so that, in fact, we don't have any of those issues. And we're prepared for all the worst case scenarios that could occur in a business transaction.
Mhm.
Mm-hmm.
Such great advice. So, what are some of the most common reasons companies struggle to achieve a successful exit despite strong financial performance?
Definitely founder dependency, 100%. It makes deals fall over every day of the week. They could have this incredible business, great revenue, love the brand, product's amazing, but the founder is still heavily entrenched in the day to day. Now, that is okay if you are staying on for a period of time as well, okay? But it still is risky. Now, in a lot of sales, we do need to stay on for a period of time. There is, that the exit few years there. So, but if you are expecting to sell a business and walk away, then that founder dependency is also really critical. The other things that I have seen where sales fall over is absolutely during due diligence when we don't have everything ready to go. The finances aren't really up to date. We don't have potential financial forecasts for the future there. Our books aren't looking very good. We've got a lot of stuff in there where in due diligence, the new owners are going, what is this? What is this? Oh, sorry, that was, I put the car through the business. Yeah, that doesn't need to be in there. Let's cross it out. Like, we don't want them to be coming back to us with any of those sorts of day-to-day questions. The other thing that definitely makes deals fall over as well is when they look underneath the hood, like, we don't have the whole system there in place. Okay, so those systems and processes, I've said it before, I'm going to say it again, but they are critical in a sale as well. So yeah, I'd say that they're the probably top four things that during due diligence can make a sale fall over. And the thing you've got to be thinking about during this process is put on the hat of the buyer. Okay, we're often just looking at it from our perspective. Now, if you were the buyer, would you buy this business? What would you want to see, during these due diligence phases as well? And make sure you've got all of that ready to go.
Great. And then oftentimes these exits have non-competes built into their structures. And I know with you're a three times exit founder, how have you handled that piece?
So, in my personal circumstances, when I'm exiting a business, I'm ready to go. I'm not going back and I'm not going back to that industry. So, my businesses have all been across different industries. Obviously, professional services and marketing. And then after that, I had an online luxury beauty company. Then after that, I had a digital jobs platform that was connecting women to part-time contract freelance work. And we were using AI. This is like 6 or 7 years ago before everyone was talking about AI. So when I've exited those businesses, I'm not staying in that industry. So for me, that's okay. Now, when I sold my first business, I had to stay for 2 years. I actually stayed for three. Okay. So I stayed longer. And the reason being was the owners were overseas. They were really happy with what we were delivering. So I still had a lot of freedom in the business. And they actually had taken away a lot of the things that I didn't enjoy doing, like accounting, like legals, and things like that. So I was able to focus on the growth of the company. And so I really enjoyed that. Now, if they had been if they were in the same office as me, I don't know if I could have stayed the 2 years, to be honest. So I think it really depends. Now, we all go into this with the best of intentions, or hopefully. But what I would also say is that often in these sorts of circumstances where you do need to stay on for a period of time and there's also the non-compete, you've got to be okay with the amount of money you're getting up front. Because if it's milestone payments and you choose to leave at some point and you're not staying till the end, then are you okay with the amount you got up front? And the non-compete is going to be in place for a few years. Now, I haven't had any issue with that. I have worked with founders that have. Now, we can get the non-compete down, but probably means you're going to take less money off the table. Okay. And my question to you as well is, why are you selling this business if you do intend to stay in the industry and work? That's the other thing. I mean, often we're selling for a liquidity event. We want to take the most amount of money we can off the table. And hopefully it gives you breathing space to be able to look at what's next and what's that next opportunity for you. And I truly believe that when you're in your earnout phase and when you're still in the business, it's hard to look at what's next. We need a bit of space.
Such great advice, Fleur.
Thank you.
So, what milestones should these entrepreneurs be thinking about long before they begin considering acquisition conversations? And I think you've already touched on a lot of this, but if there's anything else you want to add.
Yeah, I mean, I think there's financial milestones where it's giving us the confidence to say, okay, we're going pretty well here. Maybe it's time that we invested in our future. Now, that might mean investing in the management team, investing in new systems. It might mean it's time to evolve the brand more. Is it time to launch that new killer product that we've got that no one else has got? I think the finances really encourage us and give us that confidence. Now, if you're in a tech business, sometimes we're not looking at the revenue. Customer acquisition and is far more important, etc. So you will know what the levers are in your business that gives you that confidence to it's time to make those sorts of investments. And I guess for me, like if we're building businesses, let's build assets that we can sell. If there's many women on this call, we talk a lot about the women who are building lifestyle businesses. They fit in to the school hours and they're providing great, income for us and flexibility. And a lot of those businesses, we see posts on social media where it's like a hardest decision I've ever had to make, and I'm going to close my business. But what they don't realize is you can still create assets in those businesses. There is still something that someone will want to buy. It might be that you've got an amazing community around your business and you've got a fantastic database. People will buy databases, right? So for everybody I work with, I want to ensure that we're building those assets so there's something there to sell at some point.
So great. So looking back across, the businesses that you've built, what are some of the mistakes that you've, really had to learn from and that, could have reduced the value of any of your companies in the sale?
Hmm. I think the first time I sold a business, I had no idea how to sell. Okay. I started my first business when I was 23. And then in my mid 30s, I was trying to sell it. I didn't know anyone else that had sold a business like mine. I joined every business group I could. Side note, I was often the only woman in the room. So, a statistic that really drives me wild is that only 1% of businesses sold globally are owned by women. Okay. And so after I did sell that first business, and it took me about 5 years, once I figured out how to do it, I was like, I need to get all these things in place. Now, I wasn't in a big rush, but I wanted everything to look very stable. And after I sold that first business, I honestly thought to myself, this information needs to be easier to find and people need to know what they're doing, right? So I think for me, it is that making sure that everybody has access to the information and that you have this knowledge as a founder. Okay. Now, when you choose to implement it is up to you. But honestly, successful sales take years. Okay. So if you're thinking to yourself, we're a few years in, I might want to sell in the next 5 to 10. I would say, within 5 years, you need to be really looking at are the assets where they need to be. And the other thing is sometimes sales come to us. Like I actually had that happen with my second business that I sold. That was all like the first business I sold, we were in due diligence for 10 months and we had multiple offers on the table. So that was great too. We want competition, okay, because it drives the price up. Second business, they approached me. It was all done within about 6 weeks. I mean, that's an ideal scenario. That doesn't happen all the time, but I was ready to go. Okay. And I was ready to be able to take those opportunities. So I think it's just good business and to have some of these elements locked and loaded because it's going to help us make more money on the way up and it'll help us make more money on the way out as well. I think one of the things I really wish I'd understood is that as a founder, if you are staying on, you are selling yourself a little bit, okay? And you should be paid a bit of a premium for that as well, especially if there is non-compete clauses where you can't work in that industry for a certain period of time. And I think in my first non-compete, it was like, I can't start another agency. That's okay with me because I never have. And when I sold the last digital jobs platform, that business, I couldn't start another digital jobs platform. Well, no problem because I'm not, I'm exiting for a reason. And so, I think that, but the first time where I had to stay on for a few years, I think I could have got more money if I'd realized I was also, you are selling an element of yourself as the founder.
You're such a great advocate for wealth creation. I think you're blowing a lot of people's minds in our audience today. Thank you so much.
My
Um,
pleasure.
so if founders left this session and we're committed to making one strategic change over the next 12 months that would significantly increase the long-term value and optionality of their business, what would you encourage them to prioritize and why?
Look, I'm going to come back to the founder dependency. What decisions are you making every day in the business that you need to empower your team to be making? What roles need to sit underneath you as well to support you to thrive? Like when I have absolutely thrived in business, I've had amazing people sitting under me. Now, something I hear a lot in my coaching sessions at the Ginsberg firm is people saying like, I can't afford that talent, or what if they're better than me? My answer to that is, I hope they're better than you, right? Okay, because we want people that are going to elevate our business and that are going to take it to that next level. And that's what we're paying them for. We want them to have different ideas to us. We want them to be specialized in different areas. So I think, as founders, we've got to shake that off and realize that we're the ones that take the risk. It's our name on the door. But we want these really amazing people underneath us. So I think building out the key people in your team that are going to help transition the business to scaling and also potentially to a sale. I think, that is one critical step in a business that will only help grow your business in the short term and long term.
I want to zero in a little bit on timing because some
Sure.
people are, waiting for the big hit for an exit. And how would you talk about, sometimes it's better to take less, and and get on to the next project.
Mm, that is a really interesting question because I know with the last business sale I did, I actually looked back at it and went, maybe I should have closed that business, not sold it, because the challenges that came after it with a new owner who did not understand the business and change management and everything. So I think it is also about identifying the right buyer. Now, a sale is a sale. Okay. I want you to sell your business. But I also, it's much better if you sell it to the right person. And I've been involved in transactions for other people where we've looked back and gone, that wasn't the right buyer. So I think in terms of it is really critical to evaluate. It's a bit like a marriage, especially if you're staying on as well and you are getting into bed with these people. So, like, are they somebody that you would want to do business with long term or short term, even? Do you have the same values as operators? I mean, I've had that happen in a transaction as well, where culturally we thought they were the right fit and turns out they weren't the right fit. Okay. And that made the viability of the success of the businesses together moving forward quite challenging. I mean, they're still around and they're still trading, but it's not the same cultural fit that it was before. So, yeah, I think there's definitely making sure the buyer's the right buyer, but also knowing when is the right time to go. Alison, you and I spoke about this earlier. It's a bit like when do you leave the party? Now, for me, the best time, and this is controversial, but for me, the best time to sell is when you're doing the best dollars you've ever done. Okay. You've got the best team you've ever had. You feel like you're on a high. I mean, that is when it's time to sell. And what I see with a lot of founders is they stay too long. Now, I can't tell you how many people contact me and say, I need to sell my business immediately. I don't want to get out of the car and go into the office. I don't want to speak to any of the staff. Our dollars are on the way down. I mean, that's not the time, right? So there is a bit of an art to going, when is the right time? And you will know, okay, when the party's hot, it's time to go.
So great. So we straddle, high growth
Mhm.
founders as well as small and medium.
Mhm.
What would be just one great piece of advice for our small and medium as they're growing? Just wanted to
Well,
really make
well,
sure.
I said earlier, small was a mindset. I firmly believe I've always been in small to medium business. And I really firmly believe that it doesn't mean we can't be industry leaders. It doesn't mean we can't drive the industry with a level of excellence. Okay. So I've always been a market leader and I've always had people behind me trying to catch up. And so I think even being a small business owner doesn't mean you can't be the best. The best isn't always the biggest.
Mhm. Yeah, we just got a comment from Kelly. Thank you for inspiring me to think bigger.
Oh, my pleasure.
Oh. So I think we'll transition now to the Q&A. Octavia is asking, I am a product-based brand owner. I own my formulas, but I have not outsourced manufacturing yet. Where can
Mhm.
I learn what makes a good manufacturing partner and how to establish a solid contract?
So I would certainly look around for a lawyer who specialises in contracts, okay, commercial contracts. Now, not all lawyers, this is their forte, okay? So I think this is a problem too, and I'll take it back to having the right people in your corner through your business scaling up, but also when you're exiting. And I see this a lot with accountants. Now, I'm married to an accountant. I'm married to a CFO, everyone. So I feel like I can say this with authority. But I see a lot of business sales that don't end up getting the dollars they were meant to get because we had a valuation done by an accountant who doesn't specialize in valuations. Okay. Now, I just want to talk about valuations for a moment, and then Octavia, I'll come back to you. I always do two valuations, and by independent accountants who are not connected to the business, so that we can defend the sale price we're going after. So making sure that your lawyers or your accountants actually have the right skills to be able to support you is really critical. And so for Octavia, for you, I would definitely do some of my research into who does manufacturing contracts exceptionally, and you want to work with them because you want to work with the best. And like all things in business, we need to be finding the right people to be in our, backup crew.
Thank you. This is from an anonymous attendee. Most of us are solopreneurs and dualpreneurs, working corporate and we're entrepreneurs at the same time. How would you apply this? Because this person is saying the exit can't only be death of the owner. Oh, help.
What was that? The exit can't be what?
She just is saying that she or he is looking for,
Yeah.
as a solopreneur or dualpreneur that is, moonlighting perhaps in a corporate, they have a corporate job and then they're
Mhm.
moonlighting. What would be their map for exit other than, obviously folding the company because
Mm.
they're exiting.
Well, remember that we can still build assets within a business. Okay. So it might be for you if you've got a great product that no one else has. You may not be the person to take it to that next level. So you might sell your intellectual property around that, or you might have a fantastic database that another business would really value in an acquisition. But what I would say to you too is in every business, we need to make the decision if we're going all in. Now, when you're straddling corporate and you're trying to build a business, it's really tough. There will be a point in time where you feel confident to make that leap. Okay. And I'm not saying quit your job tomorrow. Every business is different. You might want to put a financial target in place and go, when I hit that target, that's going to be my signal that I step into the business full time. Okay. So I'm really big into setting financial targets. It's something that not all business owners do. Okay. But all business owners should. And so, because that they give us those key indicators that we're on the right track, we're doing the right thing, we're responding to the market's enjoying whatever we're putting out into the universe. So, I would encourage you to put, a financial target in place that you work towards where you can step into the business at some point and give this a red hot go.
Such great practical advice. Um, Lona Harden says, what point do you need to be the face of the business? I have other brands, so have stepped back, but we are about to launch an app. My investors and product team are now saying I need to step forward and start a podcast and be more visible. What are your
Mm-hmm.
thoughts here for Lona?
Well, look, I mean, I am always visible in my businesses, okay, but I'm just not the only person who's visible. So I think that that's a key factor. We have definitely seen a rise of like the CEO who's at the front, who is a content creator as well, who has the podcast, who has a big social media following. Now, what's interesting is we haven't seen a lot of those sales coming through though yet, because it is a bit of a new thing where the founder or the owner or the CEO is a bit of a celebrity, right? We haven't seen a lot of those sales come through yet. I'm really interested to see what happens there. But even in those businesses, I mean, they've got huge databases, they've got their own intellectual property. There's still things that can sell there. I have a friend who I coach her, but she has a business that helps women get divorced. Okay. It's called the Divorce Course. And I mean, her business will one day sell to a lawyer, a family law firm. Like, of course it will, right? Now, she is the face of that business. So she will probably have an earn out period where she'll have to stay on and there'll be a transition. Um, but right now she is still the face of that business. And so, I think you do what you got to do in business. And I have no problem with people stepping in to be the face, but making sure that people understand there is this big machine around you. Okay. It's not just you, it's sitting in the business.
Thank you, Fleur. So Camila asks, I am a service-based business owner creating an AI product,
Mm-hmm.
SaaS, that
Mm-hmm.
has a proven concept already, but is still in development. Would you go for the numbers first, getting subscribers, or
Mm-hmm.
just move to selling the concept?
See, because I'm a, you know, I'm a business owner, I think about money and selling. But I know that in the tech industry, they really do care more about how many people have trialed the product, how many customers have we got using things for free, even and testing and beta. So I think it depends. Maybe are you looking at VC? If you're looking at VC into the future, I don't want you to only have a little turnover because it's a new product. I prefer you to focus on getting the viability with customers if VC is the end outcome. Now, if you are intending to own this business for a long period of time, and it's about growth, then I want you to have revenue coming in. Okay, so I think it depends what your end outcome is. And remember, we said at the beginning that the end does matter just as much as the beginning does. So I think for you to spend some time mapping that out, what does a sensational exit look like for you? And then that will help you make that decision.
Mm, great.
Mhm.
So Linda Carter in the chat asks, my business is built around patent intellectual property and a licensing model. What
Mhm.
milestones should I focus on now to increase the company's value and prepare for future acquisition or exit?
Okay, so I'm presuming when you say licensing that other people are using your licensing of your product. Yes,
Mhm.
intellectual, I think it's a product. So how many licensees do we have? You know, that is an asset. What contracts do we have in place with people that are using your product or services? I would be really focused on the quality of those relationships, maybe also the number of those relationships as well. And if we are identifying a potential buyer, like you'll also be able to say, okay, well, what would they need to see for them to be impressed by this business? And also that there's still upside there. Like we don't sell businesses because we've exhausted all opportunities. We sell businesses because we've done a fantastic job at the foundations. We've proven concept. We've gotten it to a certain point, but perhaps we need a bigger player to take us to that next stage as well. So I think thinking with the buyer's hat on is also a really important part of this process and not just looking at it from our perspective.
I want to get back to some tactical questions that were asked in pre-registration, but I also
Sure.
want to ask you, you have this natural ability to think bigger, and what have you done in terms of your mindset to really
Mhm.
develop that? Because I think for small and, small business owners, people have been very inspired in the chat about the way your mindset, and what's your secret sauce around that?
Look, mindset is a journey. Okay, this isn't something that I just did once and then I'm like, oh, here I am. It is something I work on all the time. And sorry, I think what is critical too is having those people in your corner who pull you out when you want to play small. Now, I've got a few of those people, and they'll be like, when I'm questioning myself or questioning something in the business, who say, like, put on your big girl pants. What are you talking about? You're Fleur Madden. And I'm like, oh, yes, correct. I am. And, my husband is also one of those people for me as well. And he is, he's in corporate and his whole job is about risk minimization. So, me as an entrepreneur, I'm about let's jump off the next cliff. And he used to say to me sometimes, like, here are all the reasons why what you're suggesting may not work. And I had to say to him, you are killing my vibe. Okay. And I need you, if you give me that, then I can't make those leaps. So, and ever since we had that conversation, whenever I'm like questioning things, he's like, you can do it. Of course you can do it. So you need to find those people. Now, friends and family often mean well, but if they are not entrepreneurs, if they're not business owners, they're coming from a good place, but they're probably not going to give you the best advice. So I also think it's really critical where you get your advice from. Now, over the years, I've invested in coaching, like many of us would have in the chat. And you need to find the right coaches, the right people who, really do push you to that next level of excellence. I also take my own professional development as my responsibility. So between now and the end of the year, for instance, I'm committed to going to different women in business conferences around the country here in the US. Because if I am coaching so many women and lifting them up, then how do I continue to do that if I'm not lifting myself?
Mm.
Okay. So I would also say to everybody here, like make a list of what are the things, what are the rooms you need to be in the next 12 months to elevate your own mindset. I also listen to an enormous amount of podcasting and showing up today here at the Nasdaq Entrepreneurial Center. Like you guys are already focused on this, and it's just a lifelong journey. Mhm.
Fabulous answer. Thank you so much. I'm just going to come back to some tactical questions before you'll leave us with one final nugget for us to take with us. But um, what should really motivate the decision to sell?
Mm. I mean, I definitely come across business owners who say every day of the week, I have never thought about selling. Now, the fact that 99% of female businesses close and don't sell tells you people are not thinking about selling, okay? But for me, what I really want to see for all business owners, we invest a lot of time and money. We put our blood, sweat, and tears into these businesses. It is personal. And I want you to exit with something so it creates more freedom, more choice, more options. And, we talk a lot these days about generational wealth. Well, there's no generational wealth if you just close your doors. Okay. So I think for me, it's certainly, it is about making sure we have options. And that's what I want for all business owners is that they're rewarded at their exit. Now, every exit isn't an 8 and 9 figure exit. We've got to be real. There's a lot of small businesses around the world. Okay. If you exit with 6 figures or 7 figures, I'm still thrilled for you. Okay. So I always think it's better to take something off the table than nothing.
Hmm, fantastic. One last question from Priyanka. Where do we go to look for these buyers, people
Mm.
looking to buy businesses?
Well, look, I mean, there are always websites where you can list your business for sale. In my experience, any of the sales I've been involved with, we have gone to the buyer. Okay. So you need to work with somebody, whether that's a business broker or a business consultant, who will go to your list of potential buyers and start the negotiation and the journey. This is the thing we have to remember too. A sale is a journey. This doesn't happen overnight. We may be meeting with the same buyers for 6 to 12 months before really we start negotiating because we need to sell them the dream. Okay. Now, we want the dream to be true, but we also need to sell them a vision of why they should be acquiring our businesses. And it is absolutely a journey. And what I will tell you too is the first offer you get is always terrible. Terrible, like every time. So don't be offended. Just know they're going to have to put their price up if they really want this business. But we need to create a bit of FOMO around that as well. Is FOMO a word that's used here? Yeah, okay, great. So we need to create a bit of that excitement around the sale. The best way to get, I guess the sale price up is to have multiple potential buyers at the table.
Yes, thank you. I mean, this talk has been filled with golden nuggets, but if you want to just leave us with one last one.
Start today. Okay. Start today. I mean, there will definitely be something from this conversation today that you could implement. And, I'm really happy to connect with many of you as well afterwards. I know that you will have put my LinkedIn in the chat, but also you can find me at the Ginsberg Firm. That is my consulting business. And I've also just launched an online course, which is called Her Business Exit. Now, men can also take the course, okay? I love men, just want to be clear, I'm a mother of 2 sons. But when 99% of women close their businesses, I really felt I needed to create something to support women on their journey. Now, it isn't about a sale tomorrow, it is about a sale in the future and how to make more money now and also at the end. So, definitely connect in with me on any of my platforms, Instagram as well, and we can have a further conversation.
Great. And people are asking for your URL. So they're going to connect with you in the chat,
Perfect.
which is great. Fleur, thank you so much for taking the time to speak to this community and share incredible insights. What a great overview you've given. And on behalf of the NASDAQ Entrepreneurial Center and everyone in attendance today, we sincerely thank you for joining us.
Oh, my absolute pleasure. It has been such a delight to be here today. And I think this information is so critical for business owners. I wish all of you all the best with making money on the way up and making money on the way out.
Thanks again.
Bye.
We would love for you to join us for our upcoming webinars, and you can view the upcoming events by using the link in the chat. Thank you all so much for joining us today. We look forward to welcoming you back online with us very soon.